Onwards to our two special guests tonight, Seshagiri Rao from a corporate perspective and Sameeran Chakravarti to give us the economist's take on today's move and to what extent is this likely to go a long way in helping the country's economy from a tight liquidity point of view. Sameeran, I'll come to you first. How surprised were you by the quantum? 75 bips, that's quite a piece, isn't it?
Yes, even our own call was of a 50 basis point CRR cut. So compared to that 75 is a tad higher. I think it shows that RBI was quite flexible in taking a call on liquidity, thinking that it's more important to get it down closer to their 1% NETL target. So that's why they've done a 75 rather than a 50.
Seshagiri Rao, would you agree with Sameeran there? Because I know industry has been seeking a cut in CRR and policy rates for a while now. But does the quantum of this hike come as a surprise?
It is expected, but it is very timely because they have done at the time when the advance payment of taxes is coming in on 15th. So some more liquidity will be taken out by 15th. So when there is a tight liquidity conditions, the Reserve Bank of India's measure of reducing the CRR is very, very timely.
Sameeran, I want to bring you on the point that Mr. Seshagiri Rao just made, the timing of this cut. Many believe the RBI could have waited for the policy that's just a week away, or do you think it was critical that it got done today?
Yeah, I think it's slightly technical in nature that if they had done the CRR cut on 15th, then ideally they would have to say that it would be effective from 23rd, which would have created problems for the advance tax outflow period. Or the other option was to do it on 15th and say that retrospectively from 9th. They wanted to avoid that retrospective announcement, and that's why we think that they've announced it on the 9th itself, giving banks the comfort that during the advance tax outflow time, the pressure will be relatively lesser.
Mr. Seshagiri Rao, of course, the money comes back into the system, but the question is, does this really give you the elbow room that you need in order to address the liquidity crunch in the current scenario, given the crisis and the headwinds?
No, taking into account the kind of borrowings by the banks from the Reserve Bank of India and the LEF window is much larger. So therefore, this will give some relief, but not to the extent of the liquidity shortfall which is there in the market.
Right, but Mr. Rao, just explain to us to what extent is the credit crunch right now for corporates and where is it really coming from? How difficult is it for companies and CFOs like yourself to raise money for the firms?
No, today the long-term funding requirements are also reduced because the investment cycle is turned down today. So if we see for the entire financial year, at least 3 to 4% growth as a percentage of GDP is lower in the investment cycle. It is only 29 to 30% as against 33 to 34% of GDP. So that itself shows that the demand for long-term funding from the banking system is lower than what it was in the last year. So what is today is causing this liquidity crunch in the system is basically the working capital requirements. At the same time, there is not enough money in the banks. A lot of liquidity has gone out of the system also by way of the Reserve Bank of India's measures to support the rupee. So a lot of liquidity has been taken away by buying of dollars in the market. By selling of dollars in the market. So that also has taken away the liquidity in the banking system. So therefore there is a shortage, general shortage in the market, not due to very big demand from the corporates for long-term funding, but it is on account of working capital requirements.
All right. Sameeran Chakravarti, the big question then, on the back of this move, do you now believe the markets will start expecting the RBI to cut key policy rates next week?
I think, in a way, I would think that this 75 bips CRR cut is more of a liquidity infusion measure rather than signaling anything on the monetary policy stance, except for the fact that short-term rates which are going up, this measure will probably cool them down a little bit. To that extent, it will be consistent with RBI's monetary policy stance that rates should trend down from now onwards. But I would still think that March 15th would probably not see a repo rate cut from RBI because of inflation-related worries. And primarily, I'm looking at oil. Oil at 125 will clearly not be the right kind of signal for RBI to go ahead with a repo rate cut. Repo rate cut, in our view, is probably an April phenomenon.
Okay, the economist says no repo rate cut coming in from the RBI, but I'm sure the corporate will not agree. Mr. Seshagiri Rao, I'm sure you're expecting the RBI to cut key policy rates next week.
So I expect very strongly that the Reserve Bank of India will take the measure of reducing the interest rates. Then only I think the growth can come in the system and the investment cycle will come back. And the interest rate sensitive sectors are very, very severely impacted because of gradual or continuous increase of interest rates in the last few months. So therefore, the industry has been eagerly waiting for interest rate cut, at least a signal in this credit policy coming in March.
So Mr. Rao, by how much? Surely your expectations and your calculations would be based on a percentage figure, wasn't it?
This time it may not be significant because there are a lot of uncertainties which are around, and recently the railway freight increase also has happened. So I expect a 25% cut immediately.
All right, thank you, gentlemen. Appreciate Seshagiri Rao and Samir Chakravarti for joining us, giving us a perspective on what has been a surprise move by the RBI.